We just got off of Netflix earnings call, and Shauna, the stock has been on a roller coaster since reporting its mixed first quarter results. I want to go straight to the Wi-Fi Interactive and just take a look at this after hours move. I've got all of the streaming names pulled up here for our viewers, and this after hours move that they're seeing below what was today's move. And I'm going to zero in on Netflix here and pull that out. As of right now, down by about 0.6% or 0.5% after hours. In the extended session, we've been seeing this move around. And even now, as I'm loading up this chart, it's moving around. Still down, though, by about 0.1%. But here's what that coaster activity was that I was describing. After the close, this has moved lower by as much as 8%, only to then retrace some of those losses and get into positive territory, up roughly 2%. And so even as the call was going on, you saw that movement start to fluctuate, move back towards kind of the flat line, towards where it had closed on the day, and ultimately netted out at the end of the call with the Netflix executives down fraction of percent. So continuing to kind of track some of this activity, Shauna, but I got to get your takeaways from what was ultimately a mixed quarter for the company. Revenue that missed expectations slightly on the consensus side from Bloomberg estimates, and EPS that was a slim beat there.
Yeah, certainly, Brad. I agree with you. I think it was a mixed quarter. It was also a bit of a mixed call as well. They were able to reassure some skeptical investors out there, some skeptical in the street, following their earnings miss, following the fact that their subscriber growth during the quarter came up very late when you compare it to what the street was looking for. But there was no earth-shattering headline, I didn't think, coming out of this earnings call. The executives there were very measured, giving some detail and not too much. But a lot of the big focus clearly was on the crackdown and password sharing, and then also the little detail, if any, that they gave on ads. But a couple of key takeaways that I had from this call. The first one was on the password crackdown it's going to go global in the second quarter. Now, this is big. We know that Netflix has delayed it here in the US. They're saying that the US is going to be included in that 2Q rollout. Pricing, though, they stayed relatively vague on that. They said it's going to depend on a market-to-market basis. Now, remember, Canada is $7.99 Canadian dollars, so you could expect maybe the U.S. to be priced around there. But the company did say that the rollout of the page sharing has gone well, and we know that's a critical question here for so many analysts on the street trying to figure out what exactly that means for the company's future revenue here down the line. The second is that they're still confident in the live events coming after the snafu that we'll talk a little bit more about in a few minutes for the Love is Blind reunion. But they're still confident. They're saying that they might have messed up there, but that they clearly believe that they had the ability to succeed in this area. And then going back to the ad plan there, the little details that we did have on this. Now, they did say that they have a lot of work to do just in terms of what they're doing. They're going to continue to develop some of their features. They're improving some of their marketing and also sales capabilities with Microsoft. They did say that they were pleased with their per member ad plan economics, was the exact wording that was used to describe that. So they do think that they're making progress. I think they were very optimistic. They were positive on this call, but it wasn't enough to really send the stock soaring here after hours, Brad.
Yeah, spot on. And I mean, listening to some of your key takeaways, it sounds like we have a little bit of overlap here because the details that they were vague on, I mean, it sounded like they were very excited. We heard them say over and over again that they were very excited, whether it was Ted, or whether it was the rest of the executive team, Spencer, whether it was Greg Peters, all of them used in one facet or another. Yeah, we're very excited, but they were very vague on some of their details. And especially, and Jessica did a great job asking a lot of the questions that analysts, quite frankly, have probably been tossing around on their own boardrooms, on their own meeting rooms as well, trying to figure out what the future looks like for Netflix, and especially what that growth looks like from here. But it's going to come back to how they're engaging that new member that they're looking to take on and to eliminate some of the churn. Let's remember, based on some of the Deloitte digital media trends that I was kind of looking into prior to this earnings period report for Netflix, nearly half of consumers say that they already pay too much for streaming video on demand services that they use. About a third intend to reduce the number that they subscribe to. And so if you are any of these streaming players, your ears should be perking up to that and perhaps be even more transparent about the details, the features that you expect to bring to the consumer base, and as well so that Wall Street could wrap their heads around it and adequately price that into the valuation as well here. One of the other things that, quite frankly, I'm just going to give them a hit on here, pre-recorded call like scramble golf tournament format, it kind of sucks, honestly. I really didn't enjoy it at all. I would really more enjoy if you had multiple analysts. And this is no knock on Jessica at all. We've had her on the show before on Yahoo Finance, and she's always great to speak with about the broader media and entertainment landscape. But I'll tell you what, there's some value in having some of those follow-ups and having more of that live element to it. And I will add this, I think say.com has done an amazing job of weaving in the retail investor perspective. I know this is a stock that has 80% institutional ownership. I get that. But at the same time, there's so many retail investors who are also consumers of the platform of Netflix who want to be able to get a question in there as well. And so I think that's a consideration that a lot of companies should quite frankly take on as well. And then lastly here, you mentioned a little bit of this pricing. Content drives pricing here. This was a key takeaway from the call as well. If content doesn't hit, the growth narrative will struggle for Netflix. And that is something that was particularly ringing loud for me, because this is a company that also in the nation by nation or region by region basis that they go out to the consumer base on with that content, it has to be sticky. It has to make the consumer want to buy into that experience. And quite frankly, that's an acknowledgement that they had to make on the call as well here.